So I'm going to show you guys how I just made roughly 500 bucks on TURP. Now, this is the chat room where I give all of my alerts, all of my stock analysis, basically what I'm thinking about in the market and what I'm about to invest in or trade. Now, you can see that this was on July 7th, where I originally found this stock, this company. And I even made a video about what I thought about the stock and everything into it. So let's watch that video. Okay, real quick snippet. Right. But sometimes even I will set it to where we have our support. We have kind of a yearly support, and I will probably set it like right below it, or the previous day, which I would have to go back to a daily chart up here. I would set my stop loss at the previous day low. So that's right here. This is today, and then this is the previous day, and this is the low of the day. That's where you see the wicks. I would set it right there, and that gives this more wiggle room for the stock to do what it does. Because if I buy, sometimes these stocks, they'll go down a little bit, they'll bleed, but then they'll go right back up. So, you don't want to get prematurely stopped out, meaning that you bet it on the stock and then you got prematurely stopped out like right here. And let's say 2-3 days later, that thing shoots up, hits your goal. You're going to be pissed. I promise you, you're going to be pissed off because you were right, but you didn't set up your protection right. You didn't set up your entries and your exits right. So we give it a little wiggle room. Sometimes people do the low of the day. You can do it like right there, and you're only risking 9% of your trade. And so we're probably going to do the low of today, simply because this thing has downtrended just a little bit over time, or a lot of it, but it looks like it's trying to make a turnaround, and then we're probably going to shoot for maybe 20%. Now, as you can see, I recorded this 6 days ago. So that stock actually matured. It did what I thought it was going to do. I made my money. As you can see, it did not hit my risk protection, or it didn't hit my stop loss. And it also proved to be right that there was a party, right? This day that it busted out of the EMA line, and there was a party this day. And it shifted over a little bit, but it's just candlestick where there was an unusual surge of volume and demand, which caused the stock to run for the next few days. This gave me the opportunity to capitalize, and I did. I set it up just like that, where, I'm setting my stop loss. That way, if it went wrong, if, sometimes, stuff just goes wrong in the market and it drops on you, and then boom, now you lost. Confidence shot. But this time, I was right, and I got out just in time, because even though I already got out and I had my profits locked in, I thought it would go up even more, but it shot all the way down. Now, do I see this kind of trending up, over time? If it can break out past this key resistance here at $31.57, sure. But I already locked in profits. Now, my goal was not to hold it for a month. Some swing trades I do hold for a month. But my analysis was more on a daily chart, hourly chart, where I kind of seen that this was, kind of a V-shaped pattern is what I call it, or a pivot. And then it started to rise above the 20 EMA, and it had unusual volume. And that's some of the key indicators that I use to really take it to the next level and say, all right, I can capitalize on this momentum movement. I can grab a piece of the pie. As you can see, it was 31% that was the upside. but you can only see I didn't grab all of it. And I'm glad I didn't. This is a perfect example for any new trader out there that if there's so much upside, you don't have to grab all of it. You don't have to be greedy. You can grab a little bit. I should have just, went for 15%. I'd have been okay. I would have been, stopped out, or not even stopped out, but I would have took profits the day before. But, my target was around 20%, and that was fine with me. Now I'm $500 richer and I can repeat this cycle over and over and over and over. I don't have to recreate the wheel. I just keep finding companies that are doing exactly this, where they hit an equilibrium. I can look at the micro trend, and then I can, look at the macro trend and see if it lines up together. I, look at my indicators and everything checks off, and I take a risk and say, all right, I'm going to put my money into this. And I think with this stock, I think I put $3,000 into it. So with that $3,000, it got me $500 in, 5 to 6 days or a week. And that is completely fine. That's extra money on the table. Now, imagine me doing this every week, which I do. And imagine that being a replication of you doing that for months, years. That's how you grow your portfolio. You set up your risk protection. You make sure that your reward is going to be outweighing your risk. That way, if it does go wrong, that's okay. Because next time that you're right, your reward should wipe that out, and you should have some on the table of profits. So think about that when you're setting up your trading setups, or your entries, exits, stop loss. You need to understand the risk to reward game, and understand that you need to be trying to make 2-3 times what you're risking. And you should not be risking your whole account size. I say if you're going aggressive, a little over 50%, nothing over 75%. So you can grow it a lot quicker, especially if you're under a $10,000 account. But if you're at a $10,000 account, man, you can be using 30, 40%. You can use 50% of your account, $5,000 per trade. And, you can be risking, I would say 3-to-1. You can go 3-to-1. You can go 4-to-1 with swing trading. Now, with day trading, it's a lot more difficult, but you don't necessarily have to follow the same rules as day trading. And you can still grow your portfolio over time, no matter if it's small, no matter if it's, large account. I wouldn't say once you start getting to the 100,000s, even over 50,000, you need to be downsizing your trades, where you're only, taking 10% of your account equity on one single trade, even going down to 1%. Because if you're at 100,000, 1% of that is just quite enough on a single trade to grow your portfolio and maximize your returns and limit your risk. This is cookie cutter stuff. It's simple, where you can create these setups, or you can find these setups on whatever scanner that you're using, where you find something that's in stage 4 downtrending, and you see that it's creating a kind of a base, and then you see it's trying to break out. You catch them right there. And if you don't find anything, don't trade. It's that simple. But this is just a quick recap video on how you can find these setups, how you can set up your buy orders, your exit to take profits, and your stop risk protection orders, just in case things don't go in your favor. Now, with that being said, don't forget, I know I'm honing in on it. Don't forget that you can subscribe to the channel. Okay. Like I said, I'm getting back to posting more frequently. I will continue to post the swing trades of the week, where I'll set up my weekly swing trades. I'll even start posting some of my longer swing trades, where I hold for 3 to 4 weeks at a time, different time frame, but same analysis. Make sure y'all follow the channel. It's all here. Make sure you like, share, subscribe, share with your friends. Also, If you guys need to join a community, you can join our Discord, where, I'm setting up everything. You see everything right here. And, you can collab with other members in our group and really get some insights. It's not just me. It's plenty of other great traders and options. We got I Am Stock Trapper, Jonathan in there. We got crypto. High vibe assets is in crypto. You got a few other people that are doing some good things. And then you can ask questions and share your profits. So it's pretty much all I got for you guys. Thank you for joining this session. All my YMC friends out there, tune in next week. See y'all.